Welcome to this week's gold analysis. It is for the first week of June, last week of the second quarter of the year, right? So we'll just discuss briefly on what happened last week and on what we can expect this week. It's just a quick markup. Took me less than 10 minutes to mark this up, as I have already had these levels drawn out, and we'll redraw them too. So it's very easy to just analyze gold, see where it's going, right? You can see I've highlighted the lows and highs that we've seen on the higher time frame. So this is the 2-hour time frame, but 4 hours respectively looking the same. So as you can see here, we have a higher high here, and then over here I noted that institutions grabbed better buy price and got liquidity from the retail buyers on Friday. As we discussed in the previous webinar in the group, that these 2 points were points of retail buying going on, and this move down was purely a move for liquidity and to get better buy price, but also to liquidate these buyers. We liquidate these buyers, grab better buy price from this demand area over here, and then price pushed market push back above 1889, 1890 area where we retested and we continued up. And that's how the week ended. So what we can determine from this information is that a higher low has been established and that institutional positions have been taken over here, right? So we know that right now we have institutions inside this move, right, backing this move right here. Okay, what we can look out for is potential pullback to either one of these market structures before we continue up and we fill this buy range at the higher high that we have at 1910.5 higher time frame key level. So that would be our first target, would be 1910.5, fill that range. But we know that since this higher low was formed, we would be, next thing that would be coming for market structure is a higher high. And this would be our first higher high target at 1925.0, right? As you can see over here, 1925. Once we break that, I also wrote that save buys on the break and retest of 1910.5. And remember, you want a nice intraday range to be formed. You don't want to be taking a trade here in the lower time frame as prices continue up. You want a nice range to be formed, and you know what I'm talking about. Once we do reach that, and when price does break or when it retraces and then pushes up, right, then we can look for 1940.0, second higher high target. And then eventually I would like this bullish run to eventually reach weekly supply in 1950s to 1960s, right? And I wrote the third higher high target. Oh, this I meant to say 1951 here. Weekly supply here, we might see gold stall, is because this is a weekly area and gold has been pushing all the way since 1680s. So this would be a nice place for stalling and also for market to determine the next market cycle, or whether if we're going to continue up to 2000s, and then we'll see what could happen. But this is a solid target that we have in the higher time frame. Okay, so I'm just gonna quickly fix this, and then I'm gonna remove this, and then we're gonna redraw all the levels. So this is the correct one, right? Perfect. And we can redraw every single level we have. Cool. So now one good thing was, actually, let me just do one real quick. Reset chart. I'm just gonna zoom out on 4 hour so I can just make note of the levels, because we're literally going to draw every single one, and then we're gonna map out our scenarios like I discussed in the analysis. So really quickly, that's all our levels. Let's get a holistic point of view, okay? And we'll start on the monthly chart. So we know that this month is about to end, right? Okay, so we know this month is about to end, and we pushed up a total of 1,400 pips this month, right? So what we can see is that there's always been a lower wick and a higher wick on the monthly candle. So these are liquidity wicks, right? And we're gonna need to form that liquidity wick before we continue up, right? And possibly this is the range that we want to fill. These are the 1950 levels that we were talking about, right? That's the weekly range. So let's see how that was established. Okay, so if we're looking at daily, and I draw a zone right here, we can see that this is a very nice weekly daily supply area, right? Previously when we were here, price came up here, rejected it, and we dropped down to our weekly demand area right here at 1680s, and that's how we were able to determine that, right? We dropped down to that weekly demand area where we saw price change market cycles, and now we've been continuing up, right? We've been breaking past all these lows and highs, right? So we've been making our way up to our final destination, which could potentially be this area before we see gold stalling, because for the past couple weeks, 2 months, we've seen a nice trending market, right? And after trending market, we tend to see sometimes price slow down for a period before either reversing or continuing up, right? So this is our target that we're going to be focusing on at the current moment. Now, when we start drawing our key levels, we have these two major levels drawn out, right? Now let's start drawing our key levels with the horizontal line. So right there, right here, over here on these daily candles. So where was it? Sorry, right here. We got over here as well. And I'm going to rough hand these right now, but we're going to fix them up in a second. Let me just fix this up to match the daily candles right there. And then one right here. Is this working fine? So we can always adjust this. So we'll adjust this right here because those are the daily candles closing above right there. And then let's see if this lines up. So this would line up better here. So current market structure, right, going off that, although it's a little more, but you see what I mean right here as well, because we broke this structure, we retested it perfectly, pushed up, right? So these levels are working very well, and you've seen them work over the past months since we've been documenting gold. So here is, let's go further back now. So we got a kilo right here, right there. Where do we got it above here now? So I got one right here. I'm going to draw one from August 20 right there. You see that those candle bodies right here. So draw that, and we saw 1910. That's the same one that we have, right? 1910. What else we got? We got these candle bodies. These ones right here also line up with this. You see, line up with that, and then we got these daily candle bodies here, right? So these are roughly the levels that we have and that we've had for a long time, since going back months, right? So same levels that we have, and then obviously we can start drawing the higher ones, right? Like we got like 70, 72, and we got 2000, and we got this, right? Obviously there's more between here because this is a lot, but there's those, and then we can obviously look for more, right? But as you can see, is that this is the target that we're coming up to. And if we drop down to timeframes, we can see price is actively respecting bullish market structure, higher highs, higher lows, correct? So we're seeing that market structure being actively respected. And these are our levels, right? Same levels, a little rough than that we have in the analysis, but let's look at weekly time frame now. So what we were talking about is, oops, I forgot to draw. So this was 1900. That's the level I messed up. 1900 right here. See, that's the where we wanted it to pull back down to retest nine. This is supposed to say 1900, but whatever. So pull back down to 1900 right here, right? And then push up. So we just closed above this weekly candle, right? Obviously, it's possible that price continues below the weekly candle for pushing up, but this would be a nice area to retest. So it's 1900, right? So dropping down, we got 1900. We look at 4 hour. That's exact. Sorry, 19. And actually, right now would be a perfect time to just really fix these levels. So 1970. I'm pretty sure it's 72.5 or 73. Which other levels am I missing? Perfect, nice. Yep, that was amazing. Down to the retest. Cool. So 73, okay, 61, 53.5. Do we have 53.5? 52.5, we do not. So where's 53.5 right there? 53.5. And then, so yeah, dropping down, let's drop down to lower time frames, okay? So we can see that, yeah, we grabbed, these were the points. These were the points where I showed that there was retail buying going on in these two areas at this level, right? So when we saw price not breaking, and as you can see, we're still in our corrective phase, right? We're not we're still in a corrective phase. We're in this correction phase that we do before we go and we do our impulsive move, right? So market is correcting right now. So we're still printing that lower high, lower lows, and we found some sort of support here where we see buying going on here. So this is retail buying going on here. And when you see something like this happening and price not moving and not starting the impulsive bullish run, is because we're gonna grab this liquidity right here, and then most likely either go to a better buy area such as here or down here before we continue up. And that's exactly what happened, right? So price did that. Price grabbed this liquidity, grabbed these stop loss from these buyers from a better buy price, and then we pushed up. So those buyers got taken out of the market, and now the institutions are the ones in the market, right? So we see price push up, continue up. Now it's above this key level, 1900, and as you can see, perfect tests of it, right? Perfect test of 1900. So now what we can start expecting is that we've just created a higher low, right? So now we just need to create a higher high. First, we need to go to the higher high, break that, and then create the higher high. So just like the analysis, is we made that higher low now, and now it's time to make the next impulsive bullish move, most likely. So on higher time frames, just 12-hour daily, it's all lining up, right? It's looking like it's ready to push and do the next impulsive move because we just did a higher time frame pullback such as this. So looking at it here, 1 hour time frames. Let's just reset this a little. And then we can, yeah, perfect. We'll just do it right here. So 1 hour time frame, you got your higher low right here. And then what we can look for is either a pullback down to here, 1900, or maybe we can get buys in New York or London. And then we push up to 1910.5. This would be our first TP, right? It's 100 pips, so that's a lot. And then once that breaks, then we could retest 10.5 and then continue up to 1925. So remember, that's our first higher high target, right? Second high target would be 1940, which I forgot to draw. So before we continue, we're gonna go to daily and see where 1940 actually lines up. Is this 1940? Yep, perfect. 1940. So these daily candles over here. So back down to the 1 minute. Yeah, so pull back, something like down here, retest, and then we continue, right? And then eventually we make our way up to 1950, right? So this would be one of the scenarios, right? Second scenario would be, sorry, I'm just gonna move this up now. Second scenario would be price actually comes down here, sets up for buyers from here, and then continues up like this, right? And then eventually we make our way up to 1950 over here, right? So this would be the next scenario. Second scenario, right? And what did that happen? Second scenario, and then third, in case that we don't come down to any of these levels, and the third one would just be if price just kept continuing up, then I would wait for a range to be formed, solid range to be formed, come back down, retest this market structure, and on the lower time frames, right? Sets up for buys, and then when price continues up, and then you can take buys according to market structure as it's going up, right? But this will be the next scenario. And anyways, whenever there's prices breaking a certain level, you should always wait for market structure to create a range, and then you can enter once we retest that level, right? So those would be the things. And then our overall target is the weekly supply area, 1950s, right? Solid weekly, daily candle price action over here. And it's previously where we saw supply kick in, started this year, and we're back to there. Now we would be fully correcting this move as if there's positions to be closed, institutional positions to be closed. So we know there's likely that we push up into this area because institutions always hedge their positions, and they have most likely have a hedge open that now they have intent to close. So we should see price head back up into this area. Take that for what it is. Do your own research on what I just said, but that's how it's done. So there's now intent to go back up into this area, and we will likely see price do that But yeah, that's the scenarios. This is the analysis. You can screenshot it. But this is supposed to be actually pulled down to retest 1900 before going up to higher low. Okay. So, all right. Take care.